silver and gold are actually holding up very well. However, the sentiment for the resource stocks is the worst that I've seen in 25 years. And that means there's a lot of opportunity. And when it turns, and of course, if the bond market crashes and the stock market crashes, people are going to look for a safe haven, and that's going to be gold and silver. Total panic in the resource market, which I always think it's a good thing. And the next major move is going to be up. But when everybody hates gold stocks, that's the time to buy.
Equity markets displayed a bearish trend, particularly evident in the broader market, as investor sentiment was affected by mixed global cues. Despite the prevailing negative sentiment surrounding resource stocks, Bob Moriarty observes that the prices of gold and silver have remained relatively stable. The price of gold rebounds to nearly $1,925 as investors anticipate economic challenges and expect central banks to maintain higher interest rates. He believes that the prices of gold and silver haven't experienced significant drops, even when resource stocks have taken a hit. This suggests there may be more in the markets than initially meets the eye. Bob sees that in significant downturns in the bond and stock markets, individuals might turn to safe haven assets like gold and silver. Gold has a long history as a reliable store of value, with a price that has generally remained stable over time. Unlike stocks or bonds, the value of gold isn't closely tied to the performance of a specific economy. This characteristic makes gold a safe choice during times of economic uncertainty. Regarding the concept of market manipulation, Bob argues that manipulation exists to some degree in all financial markets. Therefore, when individuals allege that gold and silver markets are manipulated, they effectively sing out these metals while implying that other markets remain unaffected. Bob believes this is not an accurate viewpoint. He points to the example of J.P. Morgan facing charges of manipulating gold and silver prices. In 2020, J.P. Morgan settled for a substantial $920 million following allegations from the Justice Department. Since the global financial crisis, this marked the largest fine imposed on any financial institution for market manipulation. However, the impact of this manipulation was relatively minor, involving only small price movements in gold and silver. Now, let's watch the excerpts from Bob Moriarty's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
What's interesting to me is that the price of gold and the price of silver hasn't tumbled. I mean, in March of 2020, we had $12 silver. We got $24 silver today. So silver and gold are actually holding up very well. However, the sentiment for the resource stocks is the worst that I've seen in 25 years. And that means there's a lot of opportunity. And when it turns, and of course, if the bond market crashes and the stock market crashes, people are going to look for a safe haven, and that's going to be gold and silver. But the fact that gold and silver have not gone down while resource stocks have been absolutely clobbered is an interesting observation. All financial markets are manipulated by everyone all of the time. So if somebody tells you gold and silver are manipulated, they're really lying to you, because they're not saying that everything is manipulated. They're saying gold and silver is manipulated and inferring that nothing else is manipulated. All financial markets are manipulated, and they're manipulated all of the time. So let's go back to common logic. In August of 1999, gold was $252, and it's It's 1930 today. Was gold suppressed from 1999 until today? Silver got to $4.02 an ounce in November of 2001, when I said it was at a bottom, and it's 24 now. Was silver suppressed from $4 to 24? And it would be ludicrous to say that. Now let's go back to J.P. Morgan. if all financial markets are manipulated, and JP Morgan got caught manipulating the price of gold and silver, that just proved my point. Yes, they got charged millions of dollars, but that was more of a face-saving move on the part of the SEC and the TSX, not TSX, CFTC, because there are so many people screaming suppression and manipulation. But in fact, what people were doing is they were clipping 5 cents or 10 cents off the price of gold. They were using high frequency trading, which happens to be totally illegal, okay? But it's 80% of the market today. So they went after JP Morgan for gold and silver, but they didn't go after JP Morgan for the high frequency trading in shares. And anybody that's bought a $10 or $15 stock and had to chase it higher knows that people are using high frequency trading and it's illegal and they get away with it. And it's really no big deal because JP Morgan was not driving the price down. They were driving the price up and they were driving the price down, and they were doing it for pennies. Was it illegal? Yes. Was it wrong? Yes. Is it something that's always going on? Yes. Is it a big deal? No, I don't think so.
The U.S. seemed to be winning its battle against inflation. But the latest Consumer Price Index data showed inflation rose more than expected. Federal Reserve Chair Jerome Powell's prepared remarks for his keynote address at the Kansas City Fed's annual retreat in Jackson Hole, Wyoming, noted that inflation has come down, but it still has a ways to go. Powell indicated that more interest rate increases could be on the horizon as financial markets anxiously await to see if inflation is decreasing. Federal Reserve officials issued new warnings on Friday, indicating their willingness to increase interest rates again and keep them at higher levels for a longer time to bring inflation back to the central bank's 2% target. Bob believes there is a significant inflation problem and criticizes how the Federal Reserve manages the situation, suggesting they might be overlooking it. He also predicts that the Federal Reserve will continue raising interest rates until it triggers a significant financial crisis, which he thinks is imminent. Additionally, Bob emphasizes that the banking crisis is far from being resolved and anticipates a significant worsening of the situation in the coming weeks, which will catch many people by surprise. Let's get back to the interview.
We have not cured inflation, and the Fed is smoking some kind of really great weed because everything they say is totally nuts. But they're going to keep raising rates until the system blows, and it is going to blow. The two largest Chinese real estate companies have both defaulted. We're on the verge of total chaos to the extent that more so than any time in my life, the government is lying about everything. So what you read in the newspaper, what you hear and on the news is fiction. We've had the fastest move, the fastest rise in interest rates in history. And literally in the last week or two, interest rates have spiked. And if you examine how much it costs to buy normal house now, anyone who thinks they're going to get the price they were asking a year or two is delusional. The cost of interest is now 2/3 of the total cost of a mortgage. So the Fed can talk soft landing all they want, but there's not going to be a soft landing. $100 a barrel oil is serious, and 5, 6, 7% interest rates on mortgages, which is actually very low interest rates. When I was young, the first place I ever bought, I think interest rates were 8.5% or 9%. And they went to 18%, and they could easily do that again. If anyone thinks there's going to be a soft landing, I think they're delusional. The bank failures have not ended. They've just started. It's going to go curvilinear, literally suddenly this week, next week, 2 weeks from now, 3 weeks from now, and everybody's going to act very surprised. The Fed is now lying about everything.
Gold prices may experience short-term volatility due to uncertainty surrounding the interest rate trajectory of the U.S. Fed. However, experts believe the medium to long-term outlook for gold appears promising, particularly once the rate cuts begin. What are your thoughts on the interview? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.